If the income inequality is getting so bad, why don't we just tax the rich? The rich do everything in their power to avoid paying taxes, and one of the strategies they use often is borrowing money against their assets to avoid paying taxes altogether. So if they have $50 million in the stock market and they want access to $2 million because they want to go buy a boat, they want to make more investments, they could sell $2 million of the stock, but then they would be subject to a 20% capital gains tax. So they don't want to do that. So they go to the bank and they say, hey bank, I would like to borrow $2 million against their stock portfolio. And the bank goes, you have all this collateral, we'll give you a low interest rate, lower than you and I would get, let's say 3%. Now they're going to get a $2 million loan tax-free that they can go and spend. But you say, well, Freddie, but they have to spend 3% on interest. Yes, but they did not sell their $2 million in the stock market. And this $2 million is probably going to increase by 8 to 10%. So not only did they get tax-free money, they actually continued to make money on their loan. This is a strategy that rich people use all the time to avoid paying taxes. So even if we're going to try to raise the federal income tax or raise capital gains tax, they're going to find ways around it.
The problem isn't that we can't tax the rich, it's that we won't. The system is built to let wealth slip through cracks written into law by the wealthy themselves. Shell companies, offshore accounts, and capital gains loopholes aren't accidents, they're intentional. To fix this, we need to rewrite the tax code from the bottom up.
We need a 90% maximum income tax bracket like we had back in the 1950s, not as a tax anyone expects to collect, but as an effective maximum wage.
In the 1950s, the U.S. had a top income tax rate of around 90%, but it only applied to the ultra-rich on income above a very high threshold, not average workers. This system didn't punish success. It discouraged hoarding and pushed the wealthy to reinvest in businesses, jobs, and innovation to lower their tax burdens. The revenue from these taxes helped fund massive public projects like highways, schools, and the GI Bill, which gave millions of Americans access to college and home ownership. As a result, the middle class flourished, wages rose, and economic growth was broadly shared, proving that fair taxation of the rich helped build the strongest economy in U.S. history.
Back when we had that, it was impossible for corporations to take profits out and hoard wealth. What they had to do was reinvest in their company, reinvest in their community, and most importantly, pay their laborers a living wage. You could graduate from high school and get a job making enough money to have a house and a white picket fence and a wife and 2.4 kids and the whole American dream thing. Today, that is simply not possible. Like the federal minimum wage, if it kept pace with the price of gold, should be $200,000 a year. The minimum wage.
If the U.S. dollar had remained under the gold standard and the wealthy had been consistently taxed at fair rates since the 1950s, the value of money would have been tied to something real and limited, preventing reckless printing, inflation, and artificial market manipulation. Combined with heavy taxation on the ultra-rich, which would have curbed wealth hoarding and forced money to circulate through wages and infrastructure, worker compensation would have scaled with actual productivity and national wealth. Instead of stagnant wages while corporate profits soared, the working class would have seen their fair share of economic growth. Adjusted for this more honest system, the minimum wage today could easily reflect the true value of labor, not because the job changed, but because the economy would have stayed grounded in equity, not exploitation.
Adam Smith, the guy who invented capitalism, said the invisible hand of the market will work if the system is closed. If there's like some extractive thing within the system that is taking resources out and taking profit out, then capitalism will not work. It will turn into monopolies and regulatory capture and all of the things that we're concerned about today.
What would need to happen for capitalism to work for everyone? And I don't think that's possible because I don't think that capitalism can or ever will work for everyone. It will always revert to what we're seeing right now. But if it were to happen, we would need to remove all of the extractive foreign influence of like neoliberalism and the extractive influence of profits, like maximum profit taking. That's why we're here, because the money isn't getting put back into the system. It's being taken out, extracted. We need to remove those extractive elements from the system. And that's the point of it to a lot of these hoarders, because that's what billionaires are. They're hoarders. They're hoarders of wealth.
As things get harder financially here in the United States and the need to talk about wealth inequality and taxing the billionaires comes up, especially if you find the opportunity to talk to people on the right about that, since they really struggle with understanding that, my suggestion would be do not reference individuals. Don't talk about Jeff Bezos, Elon Musk, Mark Zuckerberg. Don't give them a name. Because on the right, they're taught, if I work hard enough, I can be a Jeff Bezos. I can be an Elon Musk. I can be a Mark Zuckerberg. And they've identified with them in a lot of ways. That's why they protect them. That's why a lot of them are protecting Elon and what he's going through and singing prayer songs for him. Because they see them as an individual and they've given them worth and they relate to them. So when you're talking about wealth inequality, I would just say, I would name big corporations like Vanguard or BlackRock. There's like 4 main ones that own everything, right? And they have their subsidiaries and go like that. But I would only ever, if you're going to do a diagram, if you're going to talk about them, use the 4 main ones. Because when people think of corporations, especially a mega corporation, they don't think of people. They think of something as cold and controlling and trying to gain power and greed and have too much money. And they're the ones taking. They don't get a picture of a really happy, nice guy in there that's just worked really hard. That's not what normal people see. So when you talk about that, you want to say like these 4, boxes here, Vanguard, BlackRock, and the other 2 or whatever, they own 98% of the wealth or whatever it is. And then over here, there's all of us, and we have to share this little amount while these 4 mega corporations take it all. And he wanted it to feel more menacing, and that's why we need to tax them. And they need to share with everybody else, because why do those 4 corporations need so much? Why do they need so much power? Because if you individualize it and you make it personal, people will push back on that because they somehow identify with that. But people do not identify with mega corporations. And especially as things get tighter and more stressful around here, using the corporations' names is key to getting them to open up their mind to being open to, having them pay more into the system. But they're not going to go to like, hey, Elon, buddy, could you, give up a whole bunch more money for us? They're just not going to do that because it feels personal. But it doesn't feel personal when it's a mega corporation.
She's not wrong. Naming the corporation, not the individual, hits harder because people see and feel the brand. It's on their bills, shelves, and screens. It connects greed to their daily struggle, making tax the rich less abstract and more personal, urgent, and undeniable. Let's rewind and look at how we ended up here in the first place.
In the 1950s, the top income tax rate in America was over 90%. It essentially was meant to avoid the oligarchical complex that we see today by making top earners distribute their wealth more fairly. By 1986, it was slashed to 28%, thanks to the Tax Reform Act of 1986, which was signed by Reagan. It was sold as tax fairness, but it ended up supercharging the rich. Capital gains, the profits the wealthy make on stocks and real estate, were slashed almost in half and taxed at the same low tax rate as regular income. Plus, they also got preferential tax treatment. Big corporations shifted profits into pass-through entities to dodge taxes entirely. Real estate investors found new loopholes. The middle class lost deductions, while the ultra-rich hired better accountants. Over time, we built a system that rewards wealth over work. Today, billionaires pay lower taxes than their assistants, and it can all be traced back to the 1986 law.